Happy lunchtime. My name is Ollie Ben. I'm the Director of Philanthropy and Social Impact for the Jewish Community Foundation here in San Diego. Thanks for signing in for today's session of Access to Insight. We're all having to adjust in terms of what it means to be connected to one another right now. We're all having to make real changes in our lives, and we know many people are experiencing real challenges. The goal of JCF's Access to Insight series is to help reestablish a sense of connection and of community. And we want to do that with some real purpose to it. That purpose is to educate and help inform you of what's going on around us, and to do that by bringing speakers to you with incredible first-hand information and resources. On our last webinar last week, which many of you joined, the La Jolla Institute's Dr. Erica Sapphire talked all about the coronavirus itself and the amazing worldwide collaboration that the La Jolla Institute is leading. In fact, the La Jolla Institute announced just this week a $1.75 million grant from the Gates Foundation to fund this work. If you missed it, you can go to our website to watch the video of the session we had last week. We will send you the link after the call. This session of Access to Insight is all about your finances. Before we get to it, I know many of you are familiar with JCF, but some of you are not. So I just wanted to share briefly about the Jewish Community Foundation, who we are, and what we're doing at this critical time. So the Jewish Community Foundation partners with individuals, families, and community organizations to help them achieve their philanthropic goals. Since 1967, we've facilitated over $1.5 billion in philanthropic grants into our community. And I'm just going to put up a slide so you can see who we are. And so you can see our professional leadership team, some of whom are on the call today. And I also want to acknowledge our amazing lay leadership team led by JCF Board Chair Janet Ashertel. The Jewish Community Foundation believes that every individual has the power to make a difference, and that together we can change the world. Our mission is to promote philanthropy through meaningful partnerships with donors and community organizations to achieve their charitable goals and to increase current and future support for a vibrant and secure community in San Diego, Israel, and around the world. And never has that mission been more important than now. As a trusted primary resource for philanthropy, the Jewish Community Foundation tries to educate, engage, and inspire generations of givers. Today, we hope our speakers do all three. So some quick introductions. First, Sheryl Rowling. Since 1979, Sheryl has been the principal of financial planning firm Rowling & Associates. She is a CPA and a personal financial specialist. Sheryl has been named one of the nation's top 250 advisors by Worth magazine and has been included as one of Accounting Today's top 100 most influential people in accounting. Also from Rowling & Associates is financial planning manager Steve Doster. Steve was a former vice president at JPMorgan Chase, then became a CFP and started his own financial planning firm before joining Rowling, where he has been since 2014. Next, we have Orin Green. Orin is a CFP and the managing director and financial advisor at Orin Green Financial, which provides comprehensive financial planning, specializing in retirement planning, equity compensation for high-tech and biotech executives, strategies for professional athletes, estate planning, and charitable giving. Last but certainly not least is an important addition to our program, our own Charlene Wallach from the foundation. Charlene has been with the foundation since 2009, oversees the foundation's operations, and directs the Endowment Leadership Institute, the Governance Leadership Institute, and the Professional Advisors Program. So first, Sheryl and Steve will talk about the markets, your portfolio, and also Social Security in light of COVID-19. Then Orin is going to do a talismanic job of reducing 800 pages of the new stimulus plan into about a 10-minute presentation. And then Charlene will be providing some simple yet incredibly powerful ways to think about organizing your financial affairs. As a reminder, anytime you can submit a question through the Q&A button at the bottom of the Zoom window, and feel free to reach out to Mara at JCF San Diego if you have any technical issues. So, Sheryl and Steve, first of all, over to you guys. You'll have to turn yourselves off of mute.
Okay, there we go. Well, thank all of you for being here, and thank you to the Jewish Community Foundation for giving us this opportunity to share some information. And we're working from home at our office, and so you'll be catching a glimpse of us in our natural habitat. And it's a very strange time right now. And with that, we have questions. What do we do with our finances? Can we go to the next slide, please? So we're going to cover a number of topics here in the next several minutes. We'll talk about what's going on with the market, what you should be doing, what's happened in the past, what kind of tips do we have for you, how can you handle your cash flow and liquidity, and when everybody's done speaking, I think we're going to be here for Q&A, and we're happy to answer any questions that you have. Next slide. So we're going to start off with the market update, and I'm going to turn this part of the presentation over to my colleague, Steve Doster. And welcome, Steve. He's very knowledgeable.
Thank you, Sheryl.
And looking forward to what you have to say, Steve.
All right, thank you, Sheryl. So let's take a look at what's happening with stocks and bonds during this crisis. So Ollie, if you want to go to the next slide. So when we're in a market downturn like this one, it's helpful to zoom out to get a bigger picture. This graph is a one-year chart of 3 different market indices. So the blue line, that's US stocks. The dark orange line is international stocks, and the light orange line is US bonds. So let's look at the blue line. That's mapping how US stocks have performed for the last year. US stocks have dropped 23% from the highest point in February until our market closed last week. But if you zoom out for 1 year, like this graph shows, US stocks have dropped only 7% from where they were 1 year ago. So put another way, if you had bought $10,000 of US stocks 1 year ago, they would now be worth $9,314. And now if we look at US bonds that are shown in the graph as the light orange line, so this line has not gone down much all since this correction began. And as for the previous 1 year, US bonds have actually increased by 8%. So if you had purchased $10,000 of US bonds 1 year ago, today they would be worth $10,801. So consider that most investors are not invested 100% in the US stock market. And a diversified portfolio has a mix of stocks and bonds. And the reason is for times like what we are going through now. Bonds act as a safe foundation while stocks provide for long-term growth. So I'm in no way trying to minimize the seriousness of what's happening right now. There is still a lot of uncertainty for everyone, and there's a bumpy ride ahead of us. But just looking at the numbers, it's not as horrible as the news makes it seem. So Ollie, you want to go to the next slide? So some people may be thinking, gosh, I knew this was coming, I should have gotten out. This is called market timing. So I want to talk about how this doesn't work. So you can go one more slide. There we go, thank you. So some people, they approach investing from an emotional perspective. They act impulsively, and their reaction is typically sparked by fear or greed. Some people get anxious about the stock market, and they decide to get out. they might even guess right and sell before a market downturn. This may ease their fear of not being invested in the market, but it will only be replaced by the anxiety of missing out on a market recovery. So investors who flee the market, ultimately, they have to decide when to get back in. In 2008, 2009 financial crisis is a good example of how the cycle of fear can drive an investor's decisions. So some investors, they fled the market in early 2009, right before the rebound began. They locked in their losses, and then they experienced the stress of watching markets climb. So they had the ongoing stress of trying to decide when to get back into the market. So the idea of behind investing is to buy low and sell high, yet following an emotional investment cycle, it can have the opposite effect. You end up buying at high prices and selling at low prices. So if we go to the next slide, we know market timing doesn't work, so what should we be doing? And the answer is surprisingly simple. If we go to the next slide, thank you. Do nothing. Stick with your diversified portfolio of stocks and bonds. We know that market timing doesn't work. You need to be right twice. First, when to get out, and then when to get back in. So what we're seeing on this chart is looking at how shows the big penalty it is when, and not if, but when you incorrectly time the market. So the S&P 500 earned an annualized return of 9.81% from 1990 to 2017. So that's shown by the blue bar on the far left-hand side. So missing out on only the 15 best performing days reduces the annualized return to 6.18%. So that's a 3.6% per year difference in only missing 15 days over a 27-year period. So this chart illustrates the importance of staying invested. Missing out on even a few of the market's best days will have a significant impact on your portfolio's returns. So Sheryl, I will let you take it from here if you want to go to the next slide.
Thanks, Steve. I'm going to dive a little bit more into what has happened in the past. And even though what we have today is different than anything else we've experienced, the market has experienced downturns in the past, and we can get some insight by looking at that. So this slide here is showing what happens to the market after there's been a crisis. And we're looking at the crises that, well, I've seen during my lifetime. Stock market crash in '87, savings and loan crisis, the Asian contagion and Russian crisis, the dot-com crash, terrorist attack of 9/11, bankruptcy of Lehman Brothers, and US debt downgrade. And what these show, the pink bar or orange bar, maybe I'm colorblind, after 1 year, it shows what's going on. And for the most part, you're looking at some recovery or some amount of slight loss in the first year. But in the vast majority of cases, when you're looking at 3 years, you've gotten more than enough back to make up for the issues. And when you look at 5 years, you're getting back into the territory of very good long-term returns. And that's backing up what Steve had talked about, that you're better off just staying in, because you don't know when that uptick is going to happen, but you do know it will happen. And, you know, this is a crisis. It's different than any of the ones listed on this chart. But the point is that businesses are in general going to make money in the long run. And that's what you're invested in. And in the short run, anything can happen. But if you stay in and stay with your strategy, you're going to be in good shape. Let's look at the next slide. So we're going to give you a few tips on what to do to manage your portfolio. If you're using an advisor like us or Orin or anybody else, hopefully your advisor is doing these things for you. If you're doing it on your own, these tips can help you out. So let's take a look at them. So the main things you can do in a portfolio downturn is to follow the rules. Okay, Steve's slide said your best course of action is to do nothing. We call that stay the course. Now, by staying the course, it doesn't exactly mean do nothing. It means do nothing in terms of your investment strategy, but there are some moves you can make that will add value. Okay, the first one is rebalancing. And as Steve talked about it, the natural emotional reaction when the market is down is to want to flee. You're feeling fear, you want to get out. Well, if you do that, you're selling low. And then when the market recovers, you're feeling a little better, you're less stressed out, and you want to put your money back in. You're buying high. That is exactly the opposite of what you should be doing. So if you're listening to what solid portfolio theory says, you should have your allocation and you should maintain that allocation. So let's say that your allocation is 60% in stocks and 40% in bonds. And because the stock market has declined, maybe now you have 50% in stocks and 50% in bonds. Well, if you do nothing, you're not taking advantage of that full 60% allocation to stocks. So what you do is you rebalance. So when you get off kilter, your portfolio, hopefully not you, you will sell some of the bonds and you will buy more stocks so that you get back into that 60-40 mix. Well, think about that. In the example Steve showed as to what happened in the last year, bonds went up by 8%. So if we sell some of those bonds, we're cashing in on some of those gains. And what are we doing? We're buying the stocks at a bargain. So every time you rebalance, you're taking a little bit of profit off the top of what's gone up, and you're buying into the bargains. And doing that over and over again adds value to your portfolio because you're selling high, buying low. That is the opposite of what emotional investors do. So this is very important. Now the other side, because I'm a CPA and I hate the thought of paying $1 more in tax than I have to, is to look at tax loss harvesting. Okay, now I'm not saying you should sell out and stay out because that would be selling low. But if you can sell just to recognize the loss and buy back right away, you've created a tax benefit and left yourself in the same position economically. Now, the IRS has figured this one out, and they say if you sell something at a loss and you buy the same thing back within 30 days, we're not going to let you take the loss. We're going to call that a wash sale. And in order to get around it, if you buy something that's substantially similar, they're going to pretend that you're still buying the same thing. So you want to buy something that's similar, but not nearly identical. So what's an example? Let's say you have an S&P 500 index fund. Well, if you sell that and then you buy a different S&P 500 index fund, that would probably count as a wash sale. But if you went from an S&P 500 index fund to an S&P 500 tax managed fund, that wouldn't be substantially similar and you could make that exchange. Why do you want to make the exchange? I mean, why don't you just sell it at a loss, stay in cash for 30 days, and then buy back what you have. The problem is, what if during those 30 days is when the market goes back up? You want to stay invested, but you want to just move from a loss position to something that's pretty much the same. You stay fully invested and you capture these losses. And by capturing these losses, you can use those to offset gains when the market recovers. Those losses never expire. And to the extent you don't have gains, you can still use up to $3,000 a year to offset other income. So rebalancing and tax loss harvesting is the way to do something while you're doing nothing. Okay, next slide. So last, we'll talk about cash flow and liquidity, especially for those people that are struggling right now. And there are several things you can do to kind of help yourself. And let's take a look at the next slide. One of the questions we got was, should you start taking Social Security right now to meet your cash needs if you were otherwise going to wait until you're age 70? Well, the bottom line is you need to look at everything you can do to help yourself out cash flow wise before you decide to pull the trigger on taking Social Security earlier. So of course, can you reduce your expenses right now? There are a lot of provisions that will allow you to limit or defer payments for utilities and mortgages and student loans. Is it possible to delay your current expenses to a future date? One thing to note, that if you want to get forbearance on your rent or your mortgage during this period of time, you need to contact your landlord or your mortgage holder today. Because if your rent is due April 1st, you need to contact them before. But there are a lot of options for delaying some things if you're in a cash crunch right now. Are you eligible for any form of government assistance like unemployment or disability? Unemployment has now waived the waiting period. You can collect unemployment proceeds immediately. And they've also opened it up to self-employed people as well in certain circumstances. Do you have other types of savings that you could pull from? You can take a loan from your 401k. Instead of it being limited to 50,000, these new laws allow you to borrow up to 100,000. And you are also allowed to take a distribution from your retirement plan or your IRA and up to 100,000 and spread out the tax payments for 3 years. And if things turn around, if you pay it back within that 3-year period, you don't owe tax on it either. So these are good ways to get money without having to take Social Security before you were intending. So there are a lot of things you can do. There's a lot of opportunities that can be used in order to give yourself some breather on how you can preserve your cash flow. Can we look at the next slide? Right, and so what I just discussed, Orin is going to go into a lot more detail on. And again, if you have questions, be sure to type them in and we'll be happy to take those. So with that, Orin, I turn it over to you.
Thanks, Sheryl. Hi, everyone. So 4 days ago, the government passed the largest stimulus in US history, 3 times as large as the 2008 stimulus during the Great Depression. The act is 880 pages long, so we've been busy for the past 3 days reading through all the provisions, but I'll touch on the highlights today. Just to get an idea of what $1 trillion, how much $1 trillion is. If we were spending that to buy cars, if we were going to buy a Honda Civic, we could buy 100 million Honda Civics for $2 trillion, one for each household in the United States. Or if you're homeschooling your kids during this period, you can ask them to calculate how long, if you laid the dollar bills end to end, how long $2 trillion would reach. Just to give you guys a clue, dollar bills are just about 6 inches long, and 1 trillion would reach 93 million miles, pretty much from here to the sun. So $2 trillion would go to the sun and back. So since the government's not building a bridge to the sun anytime soon, let's go to the next slide to see where we are spending this money. So different than some of the prior stimulus bills, which were designed to keep banks or other industries from bankruptcy, much more of this stimulus is focusing on money to individuals, money to businesses to help keep people employed, and of course, significant funds provided to help fight coronavirus directly. Looking at some of the allocations of funds, $300 billion in direct checks to individuals. That's the checks that you've probably been hearing about in the news over the last week or so, and we'll go over the specifics in a minute. $349 billion to small businesses to retain employees, $100 billion for hospitals, $58 billion for airlines, over $4 billion to the CDC, almost $9 billion for school meals. And even though students are obviously not attending school in person at the moment, many families are dependent on those meals to feed their children. And this is to continue to provide those type of programs remotely during this time. And then $16 billion for our strategic national stockpile, things like ventilators, masks, and maybe even toilet paper. So if we flip to the next screen, you'll see that the largest share of this stimulus package is to individuals, $560 billion, both direct money as well as things like unemployment, forbearance on mortgages and student loans and things like that. And then also different than many of the prior stimuluses, you'll see that small businesses get almost as much as large corporations during this stimulus package. And for both of them, it is primarily to keep employees employed during this time. So benefits for individuals. So the first check that most people will receive is the stimulus payments. About 80% of adults in the United States will receive a check. $1,200 for individuals, $2,400 for married couples, plus $500 per child. There are phase outs based on your income. So for an individual, it begins to reduce at $75,000 of income and it's gone at $99,000 and so on. But this also applies to retirees collecting Social Security. So this is not just for working adults, this is for everybody. If you qualify, you'll get this. How you're gonna get this money, if your tax return, the last one that you filed, either 2018 or 2019, has your bank account information on it, because you either make payments or get the money deposited directly, then this money will be deposited directly to your bank account. The government is hoping in the next 3 to 4 weeks, but I guess we'll see. If you do not have a bank account filled out on your tax return, then you'll receive this in the mail. And for somebody who, let's say, has suffered a reduction in income, job loss this year, so maybe based on their tax return last year, they wouldn't qualify, but this year they would. So you won't receive the deposit in 3 weeks, but you also don't lose that money. You will still get it. It'll just be part of your 2020 tax return filing. There is discussion for another round of checks in the summer if needed. And I guess we'll keep you posted. Unemployment benefits, as Sheryl was talking about, are very important, obviously, for people who have lost or even have reduced hours. The amount's going to varies based on each state. In California, $450 per week is the state unemployment insurance, but every state is also eligible for $600 per week of additional federal tax unemployment benefits. And that's also available pretty much right away. 2 other things that can help with cash flow is reductions to payments, mortgage payments and student loans primarily. if you have a federal mortgage payment, and about 80% of mortgages are backed by the government mortgage agencies, they can be reduced or suspended for up to 12 months. Now keep in mind, first of all, don't just stop paying. You'll get in trouble for that. You do need to contact your lender. There are two types of adjustments. One is a forbearance, which typically means you don't make your payments for, let's say, 12 months, but then you may have to pay it all back at that point as a lump sum at the end of that period. The other option is a loan modification, which actually just tacks those payments on at the end of the loan. So there won't be a lump sum due. It won't change your payment amount. So when you do talk to your mortgage company, make sure that you're really clear on what they're offering you and that it fits for what your needs are. Similarly for student loans, no payments on federal student loans for 6 months, and no interest accrues during that period. Those also you do need to contact your lender. And for both of those, if you don't have a government-backed loan, whether student or mortgage, many private companies are also offering some type of modification to loan payments. So it's worth contacting your loan provider for mortgages, student loans, even credit cards and car loans as well. As we move to some of the other benefits or provisions that are provided in this loan, the government has offered some assistance for retirement accounts and charitable contributions. So the first is required minimum distribution. So if somebody is over 70 and a half or 72 with the new tax law, they're required to take a distribution from their IRA each year. That's waived in 2020, the same way it was in 2009 after the last financial crisis. And it doesn't mean that you can't take money from it. So if you do need it for income, you're allowed to, but you're not required to take a distribution. If you have funds available in other accounts, you can use this as a strategy to reduce your taxable income in 2020. And for some people that are not dependent on their income, it may actually provide a tax planning strategy where you can convert money in a low tax year from your IRA into a Roth IRA. So something to talk to your CPA or your financial advisor about if it applies to you. There are also two types of withdrawals available from retirement accounts. If on the other hand, you need to access money and you may not yet be old enough to take money out of your retirement accounts without a tax penalty. So the first is the $100,000 withdrawal that you can take from an IRA penalty-free. Doesn't make a difference. You can be below 59 and a half or any age. And then you have 3 years to either pay the taxes on that. You get to spread that out over 3 years, or you can repay that to the IRA directly. The second option is most company retirement plans, 401k, 403bs, have loan options. Previously, those were limited to $50,000, but only up to 50% of the account balance. And those are now doubled to $100,000, and they've removed the percentage requirement. So if somebody has $100,000 in their 401k, they can borrow the full amount during this period. So potentially those two provisions give you $200,000 available. And finally, two charitable provisions. The first one's relatively small in the grand scheme of things, but it allows a $300 deduction even for people who don't itemize. So if you take the standard deduction, you could still make a charitable contribution of $300 and take that on your tax return. It was originally, there was a proposal for that to be $4,000, but it didn't make it in, but we'll see if there's another round of additions to the bill. More significantly is the change to charitable contribution limits. Last year, or in most years, you can only give a percentage of your income to charity and take it as a deduction in that current year on your tax return. Previously, it was 30 to 60% of your income, depending on whether you're giving stock or cash to charity. For this year, those limits are lifted completely. And so people can actually give 100% of their adjusted gross income directly to charity and deduct it from their tax return. Donor advised funds are not eligible, but this is still something that the Jewish Community Foundation can assist you with, both for COVID-19 related charitable contributions or any other ones that you're doing. So please reach out to them if you have questions on either of these provisions as well. And then a couple reminders on taxes. So normally Sheryl Rowling as a CPA would probably not be on a call because she'd be 2 weeks from the tax filing deadline. But this year, the taxes have been delayed 3 months from April 15th to July 15th, both for payments and for tax filing. And that's true for both the IRS and California. Most other states have complied as well, but if you are watching this from outside of California or you have to file taxes in other states as well, please check with your CPA or your individual state to make sure you don't miss that you don't miss any deadlines. However, if you are at home, it's probably a good time to work on your taxes. I'm sure your CPAs would still be happy to receive all your documents in a timely fashion. And then for property taxes, this varies by county. There's not an automatic extension like there is for income taxes, but just a day or two, San Diego came out and said the April 10th tax payments may be able to be delayed, but you do have to document your hardship. So since we're getting close to that, if that's something that would be important to you, please contact your county tax assessor. And we didn't cover any of the small business provisions in the bill today. There are a lot of significant funding opportunities, loans and grants for small businesses. So just because we didn't cover them, if you are a small business owner or self-employed, please check on those, talk to your CPA or financial advisor and see if those apply. And that is 880 pages in 12 minutes.
Hi, everybody. Thank you, Orin. Thank you, everybody at Rowling. I'm Charlene, and while these wonderful summaries of these important items are really important for us to all be conscious of and be aware of, and I see lots of questions coming through, we'll try to address them all. I do want to share with you some of the quick and easy, frugal and practical things that you might do since we're staying home. And it looks like we will do that for a short while longer. So the first and most important thing that I think is helpful, if we can add to the slide, please, Ollie, is what I call document declutter. This is the time for us to be sorting and filing and looking at all those papers that we might need for our current tax filings or for any year past. As a reminder, old papers and documents for your personal documents should be saved at least 5 years. And if you're doing any business or keeping your papers at home for business, at least 7. And do check with your tax preparer, because if you're in the middle of an audit or some review, you might have the need to keep your documents longer. But this is the time to get to that pile of papers you've always meant to get to and you haven't had the chance. In addition, one of the things that is a great time to do while you're home and with your family is to consider creating what I call a grab and go box. This is the box of important papers or a folder for you to grab in the case of an emergency, earthquake, fire, or other emergency. Remember too what needs to be in that box, important information such as copies of your trusts, wills, any banking account, insurance. Of course, be careful not to put too much private information there. Encrypt your passwords if you're putting a password list in there. And most importantly, ensure that each member of your family know where that is held so they can go and capture it should they be the one at home to take it out for you. It's also a really great time to ask yourself the question, can I trust my trust? What is in it? Have I accounted for all my assets listed in the trust? Do I need to take a review and ensure that some of those old accounts, which maybe I'm now finding paperwork on, were included? Or perhaps if I'm doing something new today with a new account, have I remembered to name the trust for that new account? It's a good opportunity to do a little housekeeping and provide opportunities for you to really take the time to look it over. And if you are going to be updating your trust, it might also be a really great opportunity to encourage or to consider providing for your favorite charity, to honor your lifetime of giving, As you know, it's a great way to demonstrate your commitment to that organization for the long term. And particularly if at this time it's difficult for you to provide additional funding, I know that the organizations would greatly appreciate their being considered in the long term. So do think about that as well. And one of the things I think we don't spend enough time on thinking about is evaluating our insurance needs. You're at home now, look around. Does your homeowners or your renters insurance provide enough value for that which is in your home? How recently have you updated the value for that? Be in touch with the insurance provider. See if you can combine some of your insurance policies for multiple discounts for your car, life insurance, and of course, homeowners or even renters insurance can be bundled. So do think about those opportunities. Next slide. Okay. So those of you who love to travel like me and over the years have accumulated tons of points and haven't had the opportunity to use them in the near term, I will encourage you to consider going onto those portals for those airlines and credit card companies and identify and establish which of those companies allow you to trade your travel points for gift cards to a variety of stores that you might be shopping at anyway during this time. It's an opportunity for you to use some of those points, an opportunity for you to not have to use your resources right now, but you can use some of those travel points, and each travel company have unique partners that they collaborate with. So go onto their websites and check it out. Remember too that these gift cards are all purchasable through those sites, and then you can use those online for your purchases that you're doing now anyway. And if you're doing that, you want to make sure that you're using some sort of shopping discount portal. Oftentimes going through an airline portal will give you either additional discounts or greater value for your points if you shop through those sites, or others like Rakuten.com, used to be called Ebates, actually gets cash back on many purchases, as well as some department stores who offer credit cards like Target, at which people are shopping a lot now online. Their card gives you a straight 5% off all of your purchases. So you want to look at these creative ways to shop online, stay safe, and still make the best opportunities of using your points and bonuses. And then while you might not be looking to get an extra credit card at this time, and perhaps it's not recommended at this time for you to get into a debt, I'm not suggesting that, but I do know that right now many credit cards are offering excellent sign-up bonuses with, in some cases, up to 100,000 points that you can use towards other purchases. Now, of course, there is some minimum requirement to get those new credit cards, but what you could do is take those points now, accumulate them for travel later on, because I'm sure we'll all have a chance to travel. But if not, and you really need to trade those in for credit card purchases, excuse me, for gift card purchases, of course, that's another opportunity for you to get some of those points. And of course, our public service announcement is make sure you pay, if you're going to use the credit card, make sure you pay it in full every month if you can. And then really quickly, I just want to buzz through a couple of these things. We'll share these slides with you later as a reminder. Do think about cutting the cord or using less paid cable television. There are lots of opportunities for you to get low-cost streaming services beyond Netflix and Hulu and Apple TV, and you don't have to spend a ton every month. And if you're not happy with those, or you don't think that serves your needs, be in touch with your cable company. There are many channels that are now being bundled for discounts. And many people have told me that they used to have additional sports channels. And for those of you who are not getting your favorite sports teams right now, it might be a channel that you'd like to take a break on and re-engage later when the sports games are back in service. And then quickly, the Mags for Miles is a wonderful way for you to get magazines and books online through the library. Mags for Miles allows you to use your miles from your travel miles, as I just explained, and then have a magazine delivered. It makes for a fantastic gift right now if you want to send somebody a gift and you don't know what to send them. Perhaps a magazine for something different to do while they're home, particularly for older folks and even children. There's some wonderful educational children's magazines that can be sent for birthdays and just for fun to receive something in the mail. And then, of course, likewise with newspapers, our traditional delivered newspapers still prevail. Of course, we like those. But if you're looking to save a few dollars, you can use your online subscriptions. And the last but not least, very important piece, next slide, Please be aware of scammers. Be cautious. We know that people are using emails and texts and social media and creative ways to scam our audiences and our listeners. A reminder that the census and the stimulus have nothing to do with each other. If somebody calls and says they're calling from the census and they need all your information so that you can get your stimulus payment, be warned. Please do not ever give your personal information away to anybody. Make sure that that's really very clear and that you're very careful. And then do take this opportunity to get a free credit report. The Fair Credit Reporting Act requires each of the nationwide credit reporting companies, Equifax, Experian, and TransUnion, to provide you with a free copy of your credit report at your request every 12 months. It's a good time to look over those papers and make sure that you're up to date and everything is clear the way you hope it to be. So these are some practical things that we know you could do with your extra free time. Many of you are doing some of these. I've learned some of them from our listeners. Please share your ideas and we will share those in turn with the rest of our group. Thank you so much for being part of our series today. And back to you, Ollie.
Great, well, thank you. And through the magic of Zoom, we are now in almost like a little CNN style like multi-box where our viewers can see all of us at once. If you can unmute yourselves, which I think you should now be able to do, please go ahead and do so because we have some questions. Thank you for all the great questions that came in. Orin, I think the first one is for you. When you mentioned DAFs are not eligible, can you explain that a little further? Did you mean that if you contribute cash or stock to a DAF in 2020, it's not eligible for a full deduction on AGI or something else?
Oh, that's a great question. So no, DAFs still get the deduction like they did in prior years. It's just if you wanted to give 100% of your income to a DAF that you wouldn't be able to do it. So for anybody who is very charitably inclined, maybe put 60% of your income into a DAF and then the other 40% you can give directly to the charities that you want.
Great, thank you for clarifying that. A different question, if you already took your RMD, can you repay the RMD?
So yes, but there's a couple provisions. So typically you can repay a withdrawal from an IRA within 60 days. So if you took a withdrawal in February or March, you're still okay. This new tax law, right, that allows you to take $100,000 out and put it back over 3 years would allow you to do that from January 1st. So you are getting into a little bit more complexity, but you very likely have some options to repay your RMD based on some provisions that we're still waiting for clarity. So do contact your CPA soon on that question.
Great, thank you so much. Maybe this one for Sheryl and Steve. Is now a good time to invest in real estate if you have not experienced job loss?
I think that that's a question that is very individualized. You don't want to invest in real estate if you don't have any emergency fund. If you're not maxing out your retirement contributions or getting your employer match. But if in general you're looking at buying real estate, I don't know what the prices are going to do in the near term. In the long term, real estate is a good investment. And I do know that mortgage rates are lower than ever. So that could indicate a good time. Even if your real estate investment is your own home, now might be a good time to consider refinancing as well.
Great, thank you so much. That we had more questions. Unfortunately, we are almost out of time, and so we are going to have to save some questions, but we will provide contact information for our speakers if you wish to reach out to them afterwards, although obviously they can only provide personalized financial assistance to their clients. That was a lot of information to digest. And we are very grateful to all of our speakers for providing their time to give you some incredible information. The good news is you'll be getting an email very shortly with the presentations from each of our speakers. We also recorded this webinar, and by tomorrow morning it will be up online. You'll be getting an email with the link to that. We also have a very important request. In the email we're about to send you, there's a 4-question survey. It will take you maybe 2 minutes to complete it. But if you can do us the favor of completing it, it will really help us make sure that the content we're providing to you is relevant going forward. So thank you in advance for doing that. 2 more other important things before we hang up. First, the Jewish Community Foundation has set up 3 COVID-19 emergency funds to tackle different important aspects of the pandemic relief. The email we're about to send contains details of those different funds, so please consider those if you have the ability to do so. Second, our next Access to Insight session will be same time, same place, next Tuesday at 12 p.m. It's going to be a very interesting session. We're going to have representatives of several nonprofits who are working on the front lines, addressing the economic impact of coronavirus. And they're going to be talking about what's going on with some of the most vulnerable in San Diego. I think particularly right before Passover, this will be very important and eye-opening. All of this information will be sent to you via email. If for any reason we don't have your email, or if you have any other questions, please email mara@jcfsandiego.org. Or you can reach me at ollie@jcfsandiego.org. I just want to wrap up by saying thank you so much to our speakers, Sheryl Rowling and Steve Doster from Rowling and Associates, Orin Green from Orin Green Financial, and Charlene Wallach from the Foundation. And thank you all for signing in. We hope to see you again next week.